Hello, everyone. I haven't traded intraday for at least 3 years. I have been doing only swing trading a couple of days to a couple of weeks. But now I have this cousin that he's experimenting with day trading, especially with ICT. ICT that I didn't know anything about it. I decided maybe I can help. Maybe I can review ICT. I don't know exactly what it is. In the last week, I have been reading a couple of books, watching some videos, and also following the ICT creator on X. Now, just to start, when I read about the concepts, ICT, the ideas and the concepts, they look similar to everything that I have been reading in my trading career, if we can call it like that. So there are many concepts about ICT. You can find similar ideas in other books, really old books from 1901, 1910, books from Dow, also from Alexander Elder. For example, the idea of advanced market structure, how to use different time frames to analyze the market. That's not exactly new. Also, how you manage breakout structure, change of character, high lows, using wedges for that. I think the concept is MSS. Also, liquidity grab is something that we know as bull trap, bear trap. Displacement that can be considered as a high volatility breakout or breakdowns. So I'm not saying that the idea is not original, because it is. What I'm saying that the concept, the idea behind the concept is not exactly new. Now, that doesn't mean that doesn't have value. So that's what I'm trying to figure out, if there is value on that. Just to start, I can say that in order to know about all those concepts, you need to read a lot. Something ingenious that ICT did, on my opinion, is that he got many ideas, many concepts. He created a framework, and that's what he's explaining. So the framework is suitable for his style of trading, and maybe can be reused. But on Friday, I decided to put it for a test. So I saw that the SPY was selling really hard before the opening. So behind ICT, there is this idea that the market is highly manipulated. Maybe yes, maybe no. So that's something that I was checking on Friday, December 5th, before the opening. Just to start, I went to the 4 hours chart. So I went to the 4 hour, and they have this concept of liquidity grab. So if I want to trace the support and resistance area that are meaningful for the 4 hours, I will need to check something like give me the swings, give me the high or lower lows, but don't trace the support at the end of the low in the week, because the idea is that when there is a swing, there are liquidity grabs. All these long wicks, we know it as a maybe hammer, inverted hammer. I trace this level and this level. Why? Because I see all these liquidity grabs happening. That was before the opening. So then I went back to the 5-minute chart. Let me open a couple of days. Now I went to check. Let me expand it. After this huge sellout, they have these fair value gaps concept, but my entry wasn't directed by any ICT per se. What happened is that I saw this engulfing candle at the support level with a lot of volume. What I noticed that was really, really interesting, I saw in the time and sales, these 4 orders. We are seeing the blocks of orders when usually the amount of shares being buy or sell was between in the average 4,000. We saw 4 blocks orders executed of 125,000 shares. The 4 of them with the same amount, the 4 of them at the same price. If we go back to the idea that the market is being manipulated, well, nothing screams more about manipulation than 4 orders coordinated. Is manipulation, or is someone that wants to buy a big institution? It depends how you look at it. Going back, I saw engulfing. I saw those 4 huge orders, and I got into a trade. My idea was to see what was the reaction in the opening. Something that I do is this vertical line is happening at 9:35, because I'm looking at the opening range of the 5-minute candles, and then automatically it's gonna plot the high and the low. So how you can see, the opening was strong. This is a relative volume that I have in the chart. This relative volume is not relative to the previous candles. It's relative to the previous 5 minutes opening range in the previous 13 days. Okay, so I'm not comparing with this candle before. I'm comparing with the candles of the previous days at 9:35 because I want to see how strong is the opening related to previous days. The opening was strong, and something that happened is I put the stop loss really close, and then I was stop out with profit, really nice. I continue watching the trade, and then I noticed this. We have this candle with the lower low, but the closing is inside of the opening range. So we can consider this as a liquidity grab. Again, I'm not an expert by any means on ICT. It's just that after 4 or 5 days reading, that's what the idea that I got. So, but in this case, it's also, okay, this is a hammer. If you see the psychology of the candle, the opening range, the candle is still inside of the opening range. It's testing the support, it's receiving volume, and it's rejecting the area. So I got into a trade again on this candle. I continue, and after 15 minutes, 9:55, I see another candle. So again, this is day trading. I'm looking at the behavior of the candle really closely. I notice that this candle also has a long wick testing the high level of the opening range that now is a support. So I decided to add to the trade. And then I continue. And this line, this level, is because I noticed, I got it wrong at the beginning. So this is not what I plot. What I plot was this one and this one. For that reason, the message. Notice that I'm doing this review one day after. And yesterday, the only journal that I did was this message that you see here. The entry decision here at the beginning was the engulfing candle, really huge on the support area. I saw those 4 blocks of huge orders. And then on the opening range, I saw this liquidity grab to talk on terms of ICT. And I decided to enter because it was inside of the opening range. And the opening range was with huge volume going to the long side. And then after it break out from the opening range, something that I saw is also the candle testing with a long wick, testing the support area. And then I decided to add. In this area, this candle hit my stop loss. And because I saw this kind of long wick, I decided to buy again, but with a really close stop. And I was stop out again almost here. And I decided to call it a day. So what was my experience with the ICT? At the end, it's not pure ICT because it's really difficult to remove all the knowledge over the years, everything that I read. And I find that the concepts, they are the same or they are similar. It's just that they are tailored to a way of trading. This was only one day. This was only one try. I cannot define that if it works or not. I don't do manual trade anymore. Everything that I do is automated. I have my algorithm to do it, and that's the way to know. So I'm going to create something for this. I think it's going to be kind of challenging because you have so many time frames and the concept, fair value gap, liquidity grab, all the blocks, the change of character. I already have something for breaker structure, change of character. That's not the point. It's just how I put all this together in the algorithm. That's my 2 cents for now. As soon as I have a really good backtesting results, I'm gonna share the code also.